titled, Did Tesla Jump the Shark? This is a podcast on Tesla's Q1 23 earnings call. Hi, this is MXUX. Any information presented on this channel is my personal opinion only. I'm not an attorney, financial advisor, engineer, or any other type of professional with regards to this information. Always verify to your own satisfaction any information presented and seek professional advice before investing, as losses may result. Thanks for watching the channel. This is MXUX. I wanted to give a little different perspective on the Tesla earnings call. I'm going to try to do this quickly. This is the Q1 23 call. These are some topics I think that other analysts, Farzi and the fanboys and who did I see? Tom Nash didn't cover. Now, the first thing is capacity utilization. So I'm just going to read these off. When you build a plant, you know from day one at what level it must operate to be profitable. Okay? Below a certain percentage of capacity utilization, OPEX cost is greater than production value, and that equals a loss. There are also costs associated with starting and stopping production at a plant. Musk is battling this due to his rapid manufacturing expansion, which is built for a better global macro environment. In my opinion, he has no choice. So, again, with the new plant construction, he has to keep these plants running. If they fall below a certain percentage of capacity, you're going to start losing money. I don't think anybody's been talking about that. Okay, variable pricing versus variable production. Now, I just want to say, Foxconn and Lordstown Motors is another company I follow. So you got variable pricing, which is what Tesla is doing, and you got variable production, which is the Foxconn model. Okay, an alternative to Tesla's strategy is the Foxconn BEV Corp CDMS, Contract Design Manufacturing Services model. The Tesla model is everything in-house. The Foxconn model is everything contract. So, with the Foxconn model, a manufacturer can simply turn off production. This is oversimplification. I'm sure there's contract terms and so forth involved, but it's basically true. So, a manufacturer can simply turn off production when macro events slow sales. So, with the Foxconn model, you can stop production. With the Tesla model, you have to cut prices to keep operations at a certain level, capacity at a certain level. This is why I say I think the number one competitor to Tesla is Foxconn. Moving forward. Now, margin versus market share. Lowering margin, price cutting, lowering margin equals price cutting, is a successful strategy to dominate a market. I did a previous video on this, and it does lead to dominating, taking dominant market share. In this case, it would be in the BEV market. Tesla will maintain leadership and grow their customer base with this strategy, lowering margin. However, there comes a point where you produce a loss leader, where the company actually makes a loss on each sale to maintain this strategy. Musk said he would do this if need be. So, if Tesla does reach the point where they are producing a loss leader, and Musk said he will do this, okay, the result of this eventually could be a forced capital raise. Now, of course, Tesla has billions in cash reserves, but again, depending on how long this goes on, a reduced stock price spiral, irregardless of any kind of capital need. Certainly a depletion of cash reserves, perhaps not to the level of a capital raise, so forth. So this margin reduction strategy of Tesla is unsustainable at some point. Just like Musk says, well, everyone will buy a Tesla at some price. Well, this strategy is also unsustainable at some price. So Musk is playing chicken with the macroeconomic environment. He is betting things will improve before he reaches the point of unsustainable price cuts. And this, by the way, aligns with his high-risk personality profile, which is still a positive at this point. So I think this is where Tesla is. We move forward here. Now, we got products. Tesla is the BEV leader. The Model Y is the number one vehicle sold. The Cybertruck is imminent. It's going to be very popular in the United States. Tesla has an expanding and the only expanding private charging network. And this is a massive plus. Energy business shows with the mega packs extreme promise. They can't make enough of them. And the Tesla Tau 25K car produced in Mexico is coming. However, this all requires cash flow. So again, playing chicken with the macro economy. He who dares wins. So in other words, Tesla and Musk are really pursuing a high risk, potentially high return strategy here. But they do have the product line to back it up. Now, the macro in Tesla, the macro environment in Tesla. My analysis at this point is that there could be a fledgling bull market in stocks underway. I just did some recent forecasting, time series forecasts with the S&P 500 and some other indexes and so forth. And uncannily mixed results. But they lead to this outcome that a fledgling bull market, I should qualify this, could be underway. Positive, neutral, and to a much less extent negative outcomes in these forecasts. So from neutral to positive, and some positive forecasts. So it's a mixed bowl of forecasts there, but they point to a fledgling bull market in stocks. So Tom Lee from Fundstrat has this take as well, and he has had it for some time. He's a very successful stock market analyst, and he just recently doubled down, in spite of all the bad economic news, on this concept as a fledgling bull market, and he says it's already underway. And he says outside of the FANG, stocks are, the P's are 15, 14, so there's plenty of room for growth. And there has been consecutive growth for a few quarters. You can go through my video on Tom Lee's forecast. I have 2 of them. Anyway, if we have a fledgling bull market, and if the market front runs the Fed as the Fed goes to rate cutting, I think they're going to raise May 8th, and I think this is going to be the last raise, and then cuts are going to start. There's maybe a pause and then cuts. The market, in my opinion, not an economist, not a financial advisor, is going to front run these rate cuts. And this will produce a wealth effect for many people. And the people this is going to produce a wealth effect for are likely Tesla customers. So this may allow Tesla to increase prices at some point. So this is my view right now. With the rising stock market, Tesla may have an opportunity to raise prices. And this is in spite of what may be going on with the general economy. I'm just talking about the stock market here. I think it could be a bifurcated recovery for a while, and I think the stock market is going to lead any recovery, and the general economy is going to follow. I think certainly, I've done some work on commercial real estate. Wow. That is a problem. Anyway, moving on. Now, this is something that no one has brought up. Did Elon Musk jump the shark with the Twitter acquisition? So, Musk definitely did not want to pay the price he did for Twitter. He admitted this in the recent BBC interview. Musk's billion-dollar sale to fund this buy was definitely a rug pull on Tesla hodlers, and definitely damaged the Tesla story. This Tesla was a story stock, and Musk was, Prince Charming. And the stock and probably damaged the stock price forever as well. The trance is broken and Tesla stock evaluation models have changed forever. So this was a big event. It changed the evaluation models for Tesla forever. It's like everybody woke up. It was like a slap in the face. So if you make enough decisions, eventually you make some bad ones. We can give that to Elon, and he's on balance certainly made more good ones than bad ones. And alternately, Twitter does substitute for an advertising budget at Tesla. And by the way, no advertising at Tesla is a myth. Prior to this, lavish premiums for YouTube influencers were the stealth advertising budget. The Tesla has since cut this out. They may want to re-up on this. Who knows? But anyway, the final conclusion on this, on balance, one has to ask, did Elon jump the shark with the Twitter deal? In the long run, it's going to work out. We don't know what that long run is, but you know what they say, in the long run, everybody's dead. So, anyway, did Elon jump the shark with the Twitter deal? Yet to be determined, but one possible outcome. Of course, the other possible outcome is no, but I think, there's definitely a chink in Elon's armor. So, moving forward, no one's talking about that, by the way. In summary, and again, not a financial advisor, economist, accountant, do your own DD. This is not a recommendation to buy, sell, or hold any stock. The call was somewhat worse on margins than I expected. I thought they were going to maintain at the other level, at the level previously. And it was also short on the vision thing. We didn't hear much about the future. Just some mumbling about the Cybertruck, a little bit about the power business, but obviously a lot of heavy thinking is going on at Tesla. And Tesla is a shark of a company. It has to keep swimming forward in the present corporate configuration. They have to have capacity utilization. They have to sell vehicles. They can't go backwards. It's that's the de facto anyway. At present, that's where they are with this massive build out. Upcoming challenges abound for Tesla. Can they maintain this strategy? Global macroeconomics is the key going forward. So, we're all slaves to the global macroeconomic situation. And I do believe we're experiencing profit inflation at this point. I don't believe that, I think in the United States, for example, the federal government needs to move in and do something about price controls. I don't know. I was at the store the other day, Pringles. You know, the Pringles potato chips. This is kind of a stupid example, but they were like 99 cents a tube, and then they were $1.09 a tube. I just went into the store, $2.99 for a container of Pringles. I don't believe there's massive potato inflation. Iceberg lettuce, was 99 cents a head, $1.99. Now $2.99 a head, and 1 hour's drive from here, there's endless fields of iceberg lettuce. What is going on? This is profit inflation we're experiencing right now. So this is why the Fed wants to crash the economy. Anyway, upcoming challenges abound. Global macroeconomics is the key going forward, obviously, for Tesla. Presently, Tesla has the balance sheet to handle these things. They can pursue this reduced margin strategy and even go to a zero margin strategy. That wouldn't do good things for the stock. And they have the balance sheet to do this. The question is how long? And as one of the analysts said, I think buybacks are off the table. So, that's my take on the call. Now, I shouldn't have put this in. Stock price drops could present a buying opportunity under present conditions. And what I mean by that is, present conditions is, a fledgling bull market that's going to blossom into a full bull run, okay? Of course, if that doesn't happen, all bets are off. That is the one bright spot in the economy right now, I feel. I'm not financial advice to buy, sell, or hold. Please do your own due diligence. This is MXUX. Just my take on the Tesla earnings call. A little different perspective. I hope you liked it. Some topics other people aren't talking about.